Hello, everybody, and welcome to the Plus3 Futures and Commodities show. This is the early edition as we are recording on Thursday, June 9th. I will be out of town this weekend. My son is graduating from university, Northwestern University, and so I will be attending that. So we're doing this early. As always, my name's Ben Maldonado. As always, I'm here with Barrie Hederachi. How are you, Barrie?
Doing pretty well for a Thursday.
Sleeping through the week as the market
Exactly.
as the markets have been really quiet. It's a good week to do research. It's a good week to
Absolutely.
just immerse yourself in knowledge. And so we're going to do this early this week to accommodate me. And let's jump right in. Bitcoin cannot get away from the apex, man. This apex is a magnet. Right here is the apex, which is around, let's call it 29.5. We're currently at 30,300. I mean, nothing's changed. The only thing that I think is coming imminently is how's it going to deal with this trend line? Are we going to push through it? Are we going to turn down? We are hitting the half square as well. We just passed the 69 calendar day cycle. So we should be getting to an action point here again, because we're below the half square here in the 33.5 area. Until we get above that, the odds favor a bearish resolution. So we'll have to see. I don't know if you've got anything else to add on this, Barrie, but the action since we last spoke on Saturday has been dead sideways.
Well, I think the key is that the quarter of the square, that's the line. And we're holding above it, so you can't really, it's bearish in the big picture, but within the triangle area, and if you want to nitpick this, it's kind of holding firm. So
it won't get below the apex, to your point. So
exactly. So now if we take that out, then it's going to be a quick move to the full square.
So a lot like I've been saying on a daily basis on the ES, let it resolve. You don't need to be a hero. You don't need to get into the chop. If you're trading Bitcoin, just let it resolve and then trade the direction that comes out of here.
Exactly.
All right, let me throw it over to you and let's cover the big five.
Can you see that, Ben?
Oh yeah.
Don't get too excited here.
Right. If you suffer from insomnia, you can just watch the ES at night. You'll go right to sleep.
Or during the day.
Yeah, for that matter. That's right.
Show about this space here between 4,100, 4,170. Being the key. We kind of isolated that early on, and here we are. Can't seem to break above it, and can't seem to really break through that sort of that support zone. But obviously, this is not going to go on forever. So sooner or later, this is going to have to break. And I would say, if you manage to avoid the chop here, that's great. And at some point here in the next few days, it's gonna, and it might be tomorrow. We know with the news coming out, it might be next week. The shorter term will start giving some clues as to which side it's going to break out of. So watch for higher lows and higher highs, 30-minute, 4-hour, that might give you some clues. So far, it's just a big tightening triangle on the, let's just say 4-hour, for example.
Yeah, and we joke, Barrie, about falling asleep and the sideways action and all that. But one of the key things in the market is that we see after these consolidations, we get fast moves. So you do have to be aware, you do have to pay attention, and you got to be awake. I mean, that's the bottom line, because fast moves come after this dullness.
Mm-hmm. And look at this, everybody's sort of, which way is going to break? And the reason is, look, we're 90 down from the high, and we're holding above the 90, right? Mm-hmm. And that's bullish in our book, at least firm. And then from the low, we're right below the 45-degree line, which is right here. If I move this 41.70, you can see it. See that?
Mm-hmm.
So that's the deal. We're right between the high and the low. It's kind of like a balance point. We're stuck there.
Yep.
And because of that, the break's going to be fairly strong.
Yep.
You have to watch.
Should have a lot of energy behind it.
Mm-hmm. So there's a few ways this can break. If you guys aren't into patterns, one way, we have a triangle here. We could break to the upside and run. The other is we can do a false break to the upside and roll over.
Mhm.
That's another one. Or we can just slam down without any upside.
Mhm.
So those are the three possibilities other than the obvious, going sideways. And we need some clues for now, even with squares. We usually, it doesn't wind up in a bind like this where, it's one from the other and, one way from the top and another from the bottom. So we're truly stuck. I was thinking about this today.
Right.
And this really is good support, that 90 line that we looked at from the high. And I would say, it's a time to wait for the break and just jump on a board, because whatever's is coming is probably worth the wait.
Mhm.
And yeah, and keeping your powder dry till then, or maybe play it very carefully.
The other thing we were talking about, Barry, too, is this triple bottom here is certainly ripe setup for a false break as well.
You mean this here?
Yeah.
And these kinds of moves, in the S&P anyway, rarely run up without a false break. So that's definitely in the cards.
Yeah. Keep an eye out for that for
I
sure.
will have to watch that. And here's the chart that we've been watching. I just wanted to touch this again.
Mm-hmm.
When you look at this, it's like, oh my God, look at this. We have all this, it just looks like it's just hanging there, waiting for the shoe to drop.
Mm-hmm.
And so that's possible. Now if we can get some kind of a news event, that'll give us enough power to break through this to the upside and run up. So for now, we're all also kind of bound there. Well, not much of a clue other than if it breaks this, we're going to go. So really, that's something we can rely on. And of course, like we talked about on the daily, we take out those lows or we break below that 90 square from the high, then we can go down.
Mm-hmm.
Let's take a look at the weekly. Now, weekly is losing a little grip here. Normally, if we were in a bull market, which we're not,
Mm-hmm.
so we would have settled above this line and continued to run higher or, pick up the next leg. And since we're not, you can see how, we just run out of gas, right, when we get up to the full square. So it still makes a good case for it to break to the downside, looking at the weekly.
Mm-hmm.
There's no way to get around that. But the weekly high and low, this week's high and low is going to be important next week, because we do have an inside week if nothing happens tomorrow. I mean, if we manage to trade within the boundaries of high and low of last week, then definitely this week's high and low is going to be important. Either way, that's another way to watch this for reversal on a larger level.
I think you bring up a great point about how, we're in a bear market, so it's having trouble and it's getting stuck under this. Look at during the bull market when we got to those full squares, the price action was around it, but it was biased to the upside.
Exactly.
And so there's a totally different changing character there.
Here's a good example here. We stalled a bit, we came back, got on top, took off, right?
Yep.
And here got on top, took off, on top. Here we reversed off of that. Here again, we came up, got on top, took off.
Yep. And then look right before the all-time highs that we had that consolidation, right?
Right
there. Same thing.
And right here, my God, I kind of miss those days. It's just, who wants this?
It just reminds us of what the bigger picture is, which we covered on the monthly. It's bearish in the E-minis, in the S&P.
And even, you talk about that bind, look at this, even coming off the high using the same square, we came down to the 72, ran back up to the half. So we're kind of in between, right? We finished off the square, ran back up. So again, the weekly looks like it's not ready to move higher, it's looking a little soft.
Yeah, the message from the weekly I'm getting is this is a bear market rally, treat it as such.
Well, rally, and I'm thinking specifically about how we're going to break from this 2-week consolidation, right? Which way we're going to break this. So it's weeklies look like we should just break to the downside, but we'll have to wait. See, and also this, we just measured moves coming down. To complete this, we'll have to get down to like 35.70.
Mm-hmm.
And we haven't done that. Oh, wait, did we? No, we didn't. So we came up to here. So we have
Right.
down there, perhaps on the next leg. So that's something to watch.
Sure.
Let's get on to bonds. Something that's moving a little bit this week, but not by much.
Mm-hmm.
So here's our last 4 days, pretty much hanging in here. Couple of things to note. We couldn't hold about that 140 we've been talking about. And we really couldn't hold above the 216, which is, coming off the high. So this is not looking exactly, real strong.
No. Nope.
And I would say, long as we're below this 130, 138, it's definitely in a weak position. And if we get on top of 138, but still below 140, then we get into the whole chop zone, and it's really, we need to get on top of 140 to really get the ball rolling to the upside. You have anything to add to that?
No, I think that's a good call. I mean, if it's going to bounce, it needs to do it here. I mean, it's really, really pushing it to where, you could say the bounce is over if this thing doesn't get going shortly.
Exactly.
That's my thought in looking at it. It's looking weak.
Yeah, it would have been textbook if we can got to the half square here, finishing that ABCD to the upside. But the fact that it couldn't even get there, that just, like we always talk about, that just points to more weakness. So
Yes.
It's possible, we go on and make new lows at this point. And if we look at the weekly chart, you can see, so this is kind of the bind that we talked about in the S&P. We broke down, came up to a quarter square, really couldn't hold up, and we sold off, and it's weak. So the next stop really looks like, around 132. If this can't go higher, it just doesn't look like we can do it. We had a chance to do it, but we couldn't, so it looks weaker also.
Agreed.
Let's move on to crude, our favorite one and only thing that's moving.
One of the few, yes.
One of the few. Well, we're running up into about 135 degrees, and that could be a good point to finish up this leg. It would have been nice if it came up to a double top, so I don't know if that's going to happen.
Mm-hmm.
We'll see how that plays out. In the meantime, just trade to the long side. That's all I got here.
No question.
There's really no resistance till about 130 anyway.
Which is the old highs, yeah.
Yeah, the old highs. And if we do that, we're probably going to bang into 135 just to break that. So we're looking up here. And so far, it's really tightening up. Corrections are tightening up. Everything's very tight. So we're probably going to just do some kind of a spike. And
Yeah, it does feel like there's some event coming that's going to spike this thing, doesn't it?
Mm-hmm.
Just the way it's trading. So
Sure.
quiet.
Yeah, but steady.
Yep. Quiet but steady bid.
Let's move on to the weekly. So the weekly square really, the major resistance really up at the half square on 140. And like we talk about every week, long as we're above 90, we're in good shape, and there's not much to say. It's just sailing.
Yeah. Yep. It looks good.
So stay with the long side for now. Gold, not much to add from what we talked about last week. We're really stuck between 1832 and 1887. That's sort of the consolidation area. And as long as it's holding above 1832, fine. It's a decent level. If you go back structurally, it's okay. And we'll see how it does. For now, it's just kind of hold and wait and see. And let's take a look at a weekly gold. Weekly again, we're still under 1881. That's that little zone that we drew in a while back, a few months back.
A lot of indecision, man, in different markets, isn't there?
Yeah. Well, I look at it like a sort of a holding pattern, waiting pattern, consolidation, right? I mean, we've come a long way if you look at the big picture, right? So we've been just chugging slower. But we're up here, and we're matching the highs in 2011. We're right there. So this is why you can't say there's nothing bearish about it. And everything is bullish about it. It's just a matter of, when it'll start the next leg.
Agreed.
So we're looking at just the levels to see how we do here. Let's move on to the dollar. Well, bullish for now.
Mm-hmm.
We drew in that trend line. It's holding above it. So long as it's holding above these levels, we're in good shape. I think we talked about the 101 was really the key, and we're clearly well above that. And we might get a higher volatility up here above 101, but also the push and the momentum still to the upside. The key here is to see, if we're going to get a double top or a lower high, or if we're going to go all the way and finish up the square around 105. And it's possible if something gets out of hand, we take out 105 and we get into the 110, 112 area up here. So that's in the cards, looking at the monthly, weekly charts. We'll see how that works out. For now, dollar strong. And looking at the weekly dollar, well, this is why it's strong. We're holding perfectly above the 90.
Yep.
And now it's kind of drawing in this measured move just to see, what the old legs were doing. And as you can see, we're sort of well within that,
Sure.
And going up to this half around 105, 106 wouldn't be out of the question. Like it's well within the way it's moving. So I would say continue to trade. Dollar looks like it's going to continue to be strong for a while.
Mm-hmm.
Euro, on the other hand, continues to look like it's going to stay weak.
Yeah, in trouble.
Yeah. And 108 is a key area we've been watching. And as you can see, we couldn't even get near it and consolidating. So it looks like we're going to hold this area for a while, especially since we did a 180 down and we recovered it. So as long as we're holding about that 180 level around 105, looks like we're going to be between 105 and 108 in that bracket, until we break one or the other.
Yeah, I agree. That's a good bracket on the euro.
Yeah, and it's holding it pretty well just so for now. And the weekly euro is pretty much the same story. We broke down through the square 72 and didn't quite get to the half, but did get to the third, somewhere in between. So it looks like, to me, it's probably going to go and tap the half,
Mm-hmm.
if not parity. So there's probably more to go.
And it looks like you had something end at that 72 week marker too.
Yeah, that looks, at least we got some kind of at least a 2-3
Bounce. Yeah.
bounce. So that might be it. We'll have to wait and see, but it's definitely weaker below 108, like we talked about.
It's a good review of boring markets, other than crude.
Yeah, you go through the spells, right?
Yeah.
Low.
That's right. But that means we got to be alert.
Definitely.
Mm-hmm.
So what else I have here? Nope, not much. That's it. Let me throw it back to you. Cover the commodities. We'll go. Well, there's NASDAQ.
Yep. Still dancing with that full square, as you can see.
Mm-hmm.
Last weekly show, we talked about how every day last week was bouncing up against this, and this week's no different. Just can't get over that full square, which is, call it 12,800 area. And that's the key short term. If we get over that and can sit on top of it, the counter trend rally can continue. If we get stuck under here, the risk of another sell-off is imminent.
Mm-hmm.
So that's the key level with NASDAQ right now. Between 12,750 and 12,800, that's the key. Timing wise, we did go up 10 days off the low. The last rally in March, the high came in 10 days off the low. So it's something to watch. Are we rolling over and going to do this, or are we rolling over and going to get another push up? We'll know we'll know by watching this, 12,750, 12,800 area. Mm-hmm. Above it, we can have the counter trend continuing it. Below it, you got to look out. The selling could start again. Anything to add on NQs?
No, we're good. I think we covered on the S&P side, so they're both kind of in the same spot.
Right. Let's as far as the commodities go, soybeans is one we haven't talked about in a while, and I want to talk about it here. In general, just like we talked about on the last weekly show, most of the commodity complex is either consolidating, correcting, burning off time after the move higher. You can see beans was no different. Basically made a high here in February. Then we went, sideways between this square. But just today we broke out and went above the full square here, which now we're going to watch and see. And people that have been watching these videos know how we treat the squares, right? We look at it as a decision point. Can we pull back or stay on top of this, call it 1757, 1755 area? As long as we do, it opens up the full square. And then we're talking about, heading up towards $20 beans. So this is definitely worth watching. Let's make sure it's not a false break. We want to stay on top of this square. As long as we do, basically this 3-month consolidation will be over, and the next leg up will be started in beans. I know I just brought this to your attention today, Barrie. Anything else to add on beans?
No, I think we're good. Just have to watch that break to make sure it's not a false break. And if we can clear that square, definitely we can get into 20.
Yep, $20.
At least 19.
Yeah, $20 beans would not be a problem if we get that done. Another one we wanted to check out was coffee. We talked about coffee in here when it was holding support. We had a nice push up. Now we've had this pullback. This is the important pullback, right? If we can make another higher low, preferably holding on top of this, around this half square, which call it 231, 230 area. If we can hold this area, it is full on bullish, and get a reversal, full on bullish for coffee. And I think new highs in coffee and looking, at least up to this square, which would be around 290 for coffee. So this is kind of what we want to see. We want to see a thrust. We want to see a pullback that gives us a higher low. And then on the reversal, you can look for a fast move higher. So
yeah,
coffee's doing what it needs to do. Here's the classic clean out the stops before the move, the real move starts, right? Anybody that bought off of these two got cleaned out here, and then we actually make the move higher. So things are lining up for coffee. It looks good. Any other comments you want to make here on coffee?
No, we're good.
Okay. Let's check one more that I wanted to show you guys. Copper, very similar to coffee in that we had a nice thrust up, got stopped on the full square, on the half square, and now we're pulling back to the full square. If we can sit on top of this full square, just like we were talking about with coffee, I think copper's got another leg up to the upside on a reversal here. If we just, you got the square levels, which you'll see in the spreadsheet, but if we go up and just tap this, this sort of the top of this channel, you're talking about 510 in copper, and current price is around 437. So I'm very interested in the sort of the character of this pullback. So far, it's smallish bars coming down, and if we hold this full square in that 433 area, I think copper looks pretty good on a bullish trade. Anything else to add on copper?
Well, it's sloppy, but let's wait and see how it straightens out.
Yeah, the pullbacks are important. If the pullbacks are bullish, it means the weight of the evidence is saying we go higher.
Yep.
Last one we want to look at is one that Barrie covered, but I wanted to show you a couple things on crude. Crude looks really bullish. We had this sharp pullback that held the half square. False break here started to move higher. It's a great signature if you can find it, right? If you can see it in charts and look for that false break, there's the false break, there's the move.
Yep.
Right now we're holding above this half square. First resistance now is going to be right around these old highs, around 127. But if we can get up there and sit on top of this square, and we're looking at $150 for crude. And it's not like it's going to be a big deal to get it there once we capture these levels, So the next important level is this, call it, 127. we sit on top of that, it opens up 150 to us. So crude's very bullish. We're watching this. The first sign of trouble would be is if we lose this half square, call it in the 115 area. As long as we hold that, the weight of evidence is to the upside in crude.
Yep.
So that's it for me on the commodity side. As I said, everything else is either, in consolidation or correction mode. I am watching them to see, when they start setting up for a next move up. And obviously when we see that, we'll bring them up on the weekly show. Otherwise, that's it from a dull week. The key thing is chaos follows dullness in the market. So we got to be know the levels, know the spots where when prices get violated, like Barrie showed you in the ES and the other ones, once those levels get violated and cleared, you know that this chop is over and it's time to take action. Anything else to add, Barrie, before we say goodbye here this week?
No, we're good. I think hopefully we'll have a more exciting set of charts to look at next week. We'll see how it goes. But feels like it's summer doldrums, doesn't it?
And it sure does. Sure does. But we know that big moves can come out of the summer,
Absolutely.
So we're watching levels. Hopefully you guys are too. And then when the level gets cleared, take action, because these consolidations, lull a lot of people to sleep, but they also build up a lot of energy for the move coming out of it, right? Because the people that are on the wrong side have to flip, and everybody who's on the right side piles in. So it just, it kind of feeds on itself. So we're looking for that kind of move out of here at some point.
All right.
So anyway, have a great week coming up, and we'll talk soon.
All right. Thanks, Ben.
Thanks, Barrie.
Yeah.